Good morning, everyone. Morning. It is August. It's Monday, August 12th. A start to a new week. And we've got the Fed in question to begin this week, as last week we ended on a very positive note. Right now, markets are starting the week on a new weekly high. And we're running into the first Fed event before the rate cuts in September. We have the Jackson Hole Symposium, which is not this week. It might not be next week either. Let me just double check. It's on the 24th, starting August 24th. So it's not next week either, or it starts on the 24th. It goes from the end of next week into the beginning of the week after. And, right, we have inflation data that is set to come out starting tomorrow morning. We've got PPI pre-market, and we've got CPI on Wednesday pre-market. So this week This week's starting off with some major events in terms of inflation data that are going to propel movement. That starts tomorrow. So meaning today, we're expecting not too much of a volatile, larger move in the markets. Right now, if I'm looking at the S&P 500, the daily volume, we've got about 30 minutes until the market opens, give or take, close to 25. But the daily volume is 112,000 right now, which is extremely low, especially in comparison to what we saw last week, where we've seen days with 3, 4, 500,000 contracts traded pre-market. So this is insatiably low. And we could just see a grind higher into the news event that is expected tomorrow and Wednesday. So this daily volume isn't something that I want to get super active, trade massive size on, and look for larger expected moves to start off with. So let's dive into some of the news as we start to kick off the election season, mainly into high gear, I should say. So much of the campaign content and messaging has been centered around the economy. Naturally, monetary policy has also been in the mix due to some effects of borrowing costs, which impact everything from mortgage rates to car loans to credit cards and corporate balance sheets. So the Federal Reserve is also at a key moment in its last cycle, which calls for the beginning of rate cuts starting in September 18th, before a downturn in demand and rising unemployment trigger trouble for the economy. So last week, Republican nominee, former President Donald Trump, announced that a president should have at least say when it comes to the Federal Reserve, while the VP candidate, J.D. Vance, followed up with support over the weekend. Well, not direct, he responded to CNN's Dana Bash when asked if the president should direct the Federal Reserve on how it handles interest rates. And yeah, there should be a very large distinction between the two, not to influence too much, just base it on economically what's going on to change the monetary policy. So the president already has a say in the sense that he appoints the Federal Reserve's governors. The political leadership of this country should have more say over the monetary policy. That fundamentally should be a political decision. I don't necessarily agree with that, but it is what it is. And then Democratic President nominee Kamala Harris told reporters that she could not disagree more strongly during a campaign stop in Arizona on Saturday. The Fed is an independent entity, and as president, I would never interfere with the decision that the Fed makes. Business leaders have also weighed in on the latest exchange with Bank of America CEO Brian Moynihan, noting that if you look around the world's economies, you see where central banks are independent and operate freely, they tend to fare better than the ones that don't, which is a very good point. While it's not exactly clear what having a say means, the Federal Reserve hasn't always been independent since its founding in 1913, and Congress and the executive branch heavily controlled the policy until Monetary Accord of 1951, which formally separated government debt management from monetary policy. However, there still have been other presidents since then, like Truman, Johnson, Nixon, who have also clashed with Fed chairs. Independence is literally essential, so Jerome Powell said during the semi-annual testimony last month. I think that's broadly understood, particularly on Capitol Hill, among both sides of the aisle. So when we look at this, we'll see how the day shapes up, but we're leading into multiple events throughout the next few weeks, which are important in decision making, and it's a question if the market has indeed bottomed or this is going to be a higher low. Right now, the buy side pressure that's been coming in over the past few weeks that's not true. The last week, especially into the end of it, has been fairly monumental. So it's really the bulls' game to lose at this point. If we start accepting into areas lower, specifically under like 53.20, we could present an opportunity to go and test that prior higher low, which sits at 53. So it's slow grind higher. We'll see how this manifests throughout this week, especially with the news events that could trigger some kind of turning point. But as volatility falls, right, markets are slowly grinding higher, and the VIX is still not at a lower balance, right? If we take a look at the VIX here, CBOE, volatility, the volatility S&P 500 index, we're still around that 20 area. Once we start moving under 17, right, that's when things start getting back towards a balanced region where we could most likely see more aggressive upside in these markets. So we're still in a limbo state as things are going around. We want to see how this week shapes up with this inflation data. That's going to be pivotal for the next move in these markets, as well as volatility. Seeing 65 on the VIX into the end of the year seems a little overdone at this point. That was a very cataclysmic drop that pretty much evaporated, right? All that sell pressure just washed away. Now where do we stand? Where do we look at this? Grind higher continues. Now with the S&P 500 on the futures side of things, there's not really too much to add on the individual equities. Before we do that, one of the things actually is SMH, semis. Semis have a very high correlation realistically with the strength of the market movement. So seeing semis fail to kind of explode higher negates the continued strong upside pressure in this market. So it's going to be important to watch SMH and semis, Nvidia, to start this week. If we start pulling lower on these and there's acceptance to the downside, I think that the lower high starts to manifest in these equities and we could start pulling lower. So it's one of the things that I'm going to be watching for closely. And if we've actually created a strong bottom, the SMH is going to explode higher based off that inflation data. Now, if we take a look at the S&P from a volume and auction perspective, what we've been creating is acceptance of distributions continuously higher through here, right? We're above the 53.25 and the 53.35.40, which is the bottom of a new distribution and balance to the upside, which pertains to a stronger bid. Now, another thing is that buyers, right, the imbalanced buying has been continuously coming in at higher lows, higher lows, higher lows, where the concentration of this volume is presented, making it a lot harder for the bear side to pull things lower. So today, right, realistically, I have a very key important area where we sit around that 53.62 on the S&P 500. That's the final region where I'd really want to see the buy side hold. The real final region is the bottom band of the distribution towards that 35.40. But to continue this slower momentum to the upside, I'd like to see a higher low from today's morning session and the upside target 54.15. We start losing that 62 area. Downside towards that 40 is more expected, and we start losing 40, right? We'll see what happens back at that 25. For me, the real bear on a, like, I guess, weekly perspective, medium-term perspective, is under that 53.25.20. We're fairly far away from it, about 60-point drop from there, so I can't be super bearish right now. But shall we close and move and accept under those areas? That's where I start flipping a little more and saying, okay, well, this bull looks a little tired right now. So good morning, everyone. Hope you enjoyed this update. We're going to be opening up our live room today, right now after this, and I'll see you guys in there. We'll continue with the rest of the week with our updates, and I'll see you guys tomorrow, and we'll talk about the PPI that comes out tomorrow. So enjoy. Take